Hi and Assalamualaikum. My name is Nurul, Natasha, Binti, Yusuf. Me and my group will explain about factor affecting exchange rate, and the country that we choose is Philippines. Philippines, located in the Pacific Ocean near the equator. The Republic of the Philippines consists of around 7,640 islands. The country can be divided into three main areas, which is Luzon, Visayas, and Mindanao. The capital city of Philippines are Manila, but the largest city is Quezon City. As of January 2023, the current population of Philippines are 170.3 million. Christians is the main religion in Philippines, making up approximately 90% of the population. In addition, in terms of currency for Philippines are PHP, which stands for Philippine Peso. As for now, 1 PHP equal to 0.018 US dollar, while 1 US dollar equal to 54.55 Philippine Peso. Next, we move to Philippine major export and import. Philippine major export are electronic products, other manufacturing and woodcraft. Philippines exporting mainly to China, Japan, Hong Kong, and Singapore. Meanwhile, Philippine major import are electronic products, mineral fuel, and transport equipment. Philippine main import partner are from China, United States, Japan, and Taiwan.
Hi and Assalamualaikum. My name is Natasha Binti Yasni Amir. So now I will continue to explain about factors affecting the exchange rate in the Philippines. The first one is interest rate. Higher interest rate will attract foreign capital and cause the exchange rate to rise. In 2008, the interest rate declined and is considered as the lowest interest rate in the span of 30 years from 1990 to 2021. It was said that lower interest rate in 2018 is due to the global crisis in the Philippines. A low interest rate will result in a decrease in investment from the foreign currency. Next is inflation rate. The Philippine inflation rate has reached 90.36% in 1991, and it was said the increase is due to the higher price oil and also higher price for the basic item. However, in 2015, the interest rate is declined due to the lower price for the goods and also services. When inflation is high, it will impact the country currency. Next is gross domestic product or GDP. Exchange rates are constantly influenced by country GDP data. When GDP increase, currency also increase. In 2020, the country GDP was declined to the negative 9.52% due to the impact of COVID-19 pandemic. Lastly is the net foreign asset. Study has shown that accumulation of the net foreign asset leads to an appreciation of the real exchange rate. A net foreign asset may impact the foreign exchange rate of its currency. For Philippines, every year the net foreign asset is increased, and the highest net foreign asset is in 2022, which is 6.1 trillion.
Hi and Assalamualaikum. My name is Putri Emelda Binti Jamil, and I will continue to the next part, which is descriptive statistic of Philippines for 31 years. Based on the descriptive statistic on the determinant of the exchange rate, the table shows the highest mean is net foreign exchange 1818921290322.58, while the lowest is gross domestic product 4.1803125. For median, the highest is net foreign exchange 1.1 trillion, while the lowest is inflation 4.775. Furthermore, the table shows the highest standard deviation is also net foreign exchange 18941262887.49, while the lowest is interest rate 2.191847,486.
Assalamualaikum and hi, my name is Sharifah Nazifa, Binti Abdul Latif. Today I will present the multiple linear regression. Firstly, the value for r square is 0.5810. It means that approximately 58.10% of the exchange rate of Philippine peso is explained by the interest rate, inflation, gross domestic product, and net foreign exchange. Next, the value for adjusted r square is equal to 0.51657. It shows that 51.657% of the variation exchange rate variability. The dependent variable is likely explained by the independent variable. Next, let's move on to the ANOVA. The p-value for the f-test is almost equal to 0, which is less than the level of significance 0.05. Thus, the new hypothesis is rejected. This means that inflation, interest rate, gross domestic product, and net foreign exchange statistically significant variable in explaining the variation in exchange rate of Philippine peso. The entire model is significant, and we know that inflation, interest rate, gross domestic product, and net foreign exchange pose certain effect on dependent variable, which is exchange rate of Philippine peso. Next, let's move on to the correlation. For correlation, the value of net foreign exchange and gross domestic product are highly related to exchange rate is 0.5417 and 0.1653. We can explain that if the net foreign exchange and gross domestic product GDP are increasing, thus the exchange rate of Philippine peso are also increasing and rising.
To summarize the finding, there are 4 factors affected exchange rate of Philippines, which is interest rate, inflation rate, gross domestic product, and net foreign asset. This study has analysed all that 4 factors seem to be weak against US dollar. This can be proven by looking at multiple linear regression, correlation, and coefficient analysis. As Sharifah Nazifa explained before, the p-value for the f-test is equal to 0, which is less than the level of significance at 0.05, so the null hypothesis is rejected. This means that inflation rate, interest rate, gross domestic product, and net foreign asset is statistically significant variable in explaining the variation in the exchange rates of Philippine peso. Next is correlation. The value of net foreign asset and gross domestic product are highly related to exchange rate. If net foreign asset and gross domestic product high, exchange rate also will be high. That's all from our group. Thank you.